So we're going to sit down. We're going to have a little bit of a panel discussion. We've been talking about innovations in creativity and finance to create positive impact. And a lot of the financial tools we've talked about have been really ones that high net worth, ultra high net worth angel investors can participate in. Which is important. People like Bill Gates and Rockefeller have done a lot. Pierre Omidyar has also done a huge amount. But I'm here today to talk with these two gentlemen a little bit about the democratization of impact investment and how do we enable many to engage in this space. So everyone has values. How do we allocate our assets in line with our values as we allocate our time and everything else in line with those values? So I'm just going to pass off. We'll do a quick little introduction, and then we'll jump into a few questions. So Bertrand, do you mind telling us a little bit about yourself and what you're doing at Impaakt?
Sure. Yeah, sure. Thanks, Mike. Hi, everybody. So my name is Bertrand Gacon, and I've been working in the impact investing and sustainable finance world for many years, including a couple of years at BNP Paribas, actually. I'm now the CEO and founder of a collaborative platform, which is called Impaakt, and whose objective is to bring robust impact measurement and impact scoring to every single citizen of the world, so that it is accessible for free for each of us to check and get informed about the impact of all companies we interact with on a daily basis. And that is very important because what gets measured gets managed. And we want investors in particular to have the tools that are needed to really take into consideration the impact of their investments. And that is something that is not really working today, that is not really taking place today. In the financial sector, we've seen many companies that are now integrating what we call ESG criteria, but most of those data are based on the practices of the companies, not really their impact. And we wanted to find a new way of looking at that, and we believe that the only way to really understand the complexity of the impact of companies is by getting many people around the table, sharing their views, sharing their insights, sharing their information, and building together a universal database around the impact of companies that can then be used for investors to make informed decisions and make sure that the hundreds of thousands of $billions that are invested today in the stock markets are actually integrating that notion on a very daily basis.
How are you doing that?
Well, the principle is very simple. It's a web platform where everybody, you guys, all invited. It's entirely free. You get there and you have the chance to, or you're getting the chance to actually post some what we call small impact notes. So there's short piece of analysis on one specific topic for one single company, and share that with the rest of the community. The community will review your insight, your input, and will rate the quality of what you've been provided and sharing with the community. Then we build on that, recognize the good contribution, reward actually financially the good contributors, and have mechanism and algorithm that will use that to then rate the impact of the company. So, I mean, just have a look, impaakt.com. The spelling is impaakt.com, and you understand very quickly how it works. If I would phrase it very quickly, it's a Wikipedia of impact.
Great. Thank you for that, Bertrand. And so this is all on publicly traded companies, so companies on the stock market, which is a nice transition over to John, who's joined us from San Francisco.
Sure, thanks. Hi, everybody. My name is John Boyer, and I've worked in the impact space for the greater part of 3 years now as head of analytics for a San Francisco-based firm called Newday. And the work that we're doing is really around reducing the barriers to entry for access to impactful financial products. And what I would characterize is that there are 3 major pillars to the platform that we've created. First of all, being transparency. We want to provide, as much as possible, complete transparency to our entire user base over the investment decisions that they're making, that we're advising for them, with the understanding that an informed investor base can really effectively hold the companies that they invest in accountable for what they're doing and ensure that they're making meaningful progress on the commitments that they have made. The second major piece of it is education. We want to have this continuous dialogue around the issues that matter to our investors, whether that be animal welfare or gender equality or climate change, the major challenges that our planet faces are also the biggest investment opportunities for the companies that are seeking to provide solutions. And so the second role of our platform we view as being this hub for education that you can sign on. It's free to sign on. You can read every day about all the cool things that are happening in the space. And then, of course, the third pillar is the investment itself, which today you can do for as little as $5. Takes about 5 minutes to sign up. And so, the barrier to entry in that sense is, again, almost zero. And our intention is that we want these products not just to be for the high net worth space, which, of course, traditionally has done a lot of great work.
Yeah.
And not to discount the impact that that's had, but our view is that in the past decade and the coming decade, the role of social media and connected platforms are really going to shift the power of the individual voice in a very meaningful way, and that if we can provide a platform with all of the above elements where we can sort of unify a lot of the passionate discussion that's happening, we view that being very impactful.
Let's kind of drill down a little bit on this point of kind of social, right? Because both of your platforms, it sounds like there's an element of social. There's more information gathering and contribution on your side. In yours, people are more kind of passive consumers, it seems, but there may be a social element down the line. All right, so the question I'd like to interrogate a little bit is the power of social to catalyze impact investment kind of at this more democratic level. But then what about quality and quality control? Because, I mean, who here's seen a video and then has read the comments and has kind of wondered, what kind of person is trolling and writing this? Does anyone know? Am I the only one who reads troll comments? Okay, or maybe it's just me. So maybe everyone out here is a troll. What do you do when it comes to quality control, right? So when you have individuals who can influence either information or otherwise, how do you guys think about this?
Yeah, that's obviously a very fundamental issue for us. The entire model is based on the community. We do not filter the contributors up front, so you don't have to have any credential or a PhD in impact analysis to get registered on the platform. The idea is that everybody can do that. But we know some models like Wikipedia and others that have created some specific mechanism around that. I would say there are mainly three things we do to ensure the quality. The first one is that we empower the community to do the quality assessment. Mm-hmm. So everybody is free to actually publish anything, but then the community will review your contribution and we'll go into a detailed rating process to verify that it is objective, it is relevant, it is insightful, it is documented, it is fact-based, all of those questions.
Will you ever delete comments, or will you only ever highlight that they do not seem fair and balanced?
They're not deleted, but then everybody can see the rating of the quality rating of that contribution. Obviously, nobody wants to waste time reading poor quality contributions, and everybody gets focused on the high quality contribution. And only the good ones are the ones that get rewarded, and that is the second level that we use. We incentivize the contribution according to that level of quality. And so people that want to contribute to the platform and get remunerated for their work, they have to reach the highest standard of quality, otherwise they don't get remunerated. And then the third one is a more technical part where our own algorithm can detect some of that, I would say, attempt of bias information or manipulation, or depending on the patterns of the rating and so on. So there's also a technical part that we use to detect that, and the whole together is working pretty well. I mean, so far. And if you look at what's going on in many similar platforms, actually, it is quite well demonstrated that if you have the right mechanism in place, you can actually produce a very high quality database based on the wisdom of the crowd, if I would call it this way.
So it sounds like a challenge you're very well aware of, but addressing, and it sounds like you have those points down. John, does the crowd influence, or can it negatively influence outcomes or impact?
So the social features of the platform is something that we're still working through with a great degree of caution. And of course, you look at almost any other news feed app out there, and you have the daily politics news, you have the daily sports news, and like you said, the comment section that you read on those types of platforms, it's derisive. It's it can be toxic. And what we were very conscious in doing from day one is we want to present a platform that is really all about the positive. It's very much grounded in optimism, And so, if we're featuring an article like, AI has thwarted illegal fishing in this region, it's hard for somebody to sign onto the platform and really, cast negativity over that.
Right.
Whereas, you read nowadays very often, Trump administration did this or that, and the comment section is immediately this flame war. And of course, our interest is to present these topics in a way that is about social and sustainable progress. And so, the other decision that we've made in curating a news feed for our audience is that we're really not trying to take sides on any of these issues. We want to present as neutrally as possible a platform for debate when we open that up. And so far, what we've heard from our user base is resoundingly positive.
Fantastic.
As far as the ability to log on and not see all that negative news, to really get this snapshot of here are all the good things that are going on.
Here's a question. It's a hypothetical question, and hopefully one that becomes real. You're both so successful in directing capital into the most positively impactful companies. What happens when those companies, from a financial perspective at least, become in such high demand that their prices go up and capital flows away from the bad companies, the oil companies, the ones who aren't caring at all about the externalities? Is there a risk, and is there a chance that we're not able to progress because people see huge financial opportunities in those companies that are receiving low ratings on your platforms? And a specific kind of point is the Sin Fund, which is a fund in Florida that invests in firearms, pornography, tobacco. The fund performs quite well. What are your thoughts on that? And maybe it's not just 1 year, maybe give us a longer-term view on how we can really achieve that kind of systemic longer-term kind of change.
Yeah, I mean, the purpose obviously is to make sure that again, the hundreds of billions that are invested in those companies can be shifted and that we can accelerate the transition towards a more impact-driven economy. And I think the reason why the Sin Fund, or the whatever you call it, is performing well is because the investors don't take into consideration the actual social value of those companies and the externalities that is actually also they are also causing. So the whole purpose is actually to better factor in those elements so that every single asset manager, investor, pension fund can start redeploying capital by better integrating and looking at what companies are actually contributing to a better world and what companies are actually not contributing to a better world, so that those companies themselves, at the end of the day, would have to react to that. We know the power of the investors, and we want to leverage on that power to actually change things, that the ultimate goals, right? And the clock is ticking, so we need to accelerate that transition. And we believe by providing the tools to the investors to do that, then at least they have a chance to integrate that and to change things. And in terms of financial performance, well, obviously, if they start investing in the companies that have the most positive impact, the price of those companies will get up, the price of the not so good companies will get down, and so there will be a kind of, I would say, positive cycle there, where there's also a financial incentive to go into the most, positive companies because the price will go up.
And do you think it will stay up, or is there a risk that things kind of revert back to the mean when people try to take advantage of the arbitrage opportunities?
Yeah, that could be also one of the issues, but I think what we see today, and Jean-Laurent Bonafé to some extent alluded to that, is the fact that there is a very strong cultural shift and generation shift that investors today, and particularly the youngest investors, they really don't want to invest just for profit, and so I don't think they will be ready to make any arbitrage, even though they might get them, a few additional basis points of performance, and ignoring those criteria anymore. It's just like we're moving in a new paradigm where it's not just about risk and returns, it's about risk, return, and impact, and how you maximize the three of them. So they're not going to trade off returns for impact, but they're not going to do the other way around either. I mean, they're not going to say, I'm giving on impact because it will give me, a few additional points of return.
Let's check that. Who here is going to trade impact for return?
Please, in this room, at the ChangeNOW Summit. Right.
But I think, that could have been answered both ways. So we're going to assume that everyone who answered that question would decrease their levels of return for higher impact. Is that fair to say? Yeah, those hands went up again. Good.
Thank
okay.
you.
Very good point. John.
Sure. So on a couple fronts, I mean, there are some very important points around the types of companies that we fundamentally choose not to invest in versus those that we preferentially invest away from. And to give an example of that, we consider some of the traditional types of companies like tobacco, alcohol, firearms, or defense involvement, where if you look at all of the work being done on the Sustainable Development Goals, we just view those companies as fundamentally opposed to development there. Just inherent to their business lines is this opposition and detraction from progress there. And so on our platform, we will never recommend investment into those companies. We will never include them in our funds because we don't view that there is a role for certain of those activities in a sustainably developing world. But then there are the companies like an oil and gas company. And the stance that we want to take there is, okay, well, let's find the best examples. Let's find the ideal for this industry. Of course, the energy industry isn't going anywhere. We're always going to need to power innovation in industry. But the question is, how do we do this most sustainably? How do we accelerate this transition to renewable energies and decarbonize our, the industrial ecosystem, and manufacturing processes? And our view there is that if we are continuing at a massive scale to preferentially invest in the companies that are setting the best examples, that is indeed durable, because as long as you persist in doing that, the companies that are not doing so, that are lagging their industry peers, not only experience the effects of their poor standards, if they're less resource efficient, less materially efficient, their cost of actually operating continues to be higher, and some of that does get priced in. But the more we're able to create this perception that these are the ways that things need to be done now, with long-term thinking in mind, with sustainability in mind, that persists quite durably.
Fantastic. And it sounds,
if I may maybe jump in here,
please,
I think this. We're touching about the complexity of actually assessing the impact of companies, right? Which is not a black and white answer. It's like I want to get rid of the oil companies and I want to invest in, I don't know, in candies or whatever. It's slightly more complex than that. Every single company has some positive impact and negative impact. There's not one single company in the world that is all about negative impact or all about positive impact. And so the challenge there is to be able to really gather a very detailed, granular database where we take the time to look at every single dimension. And this is also why we believe that it cannot be done by one single expert, or that guy would be a genius. If you try to look at the impact, I don't know, of Alphabet, with the many services starting with Google, what is the impact of Google on the society? Some of them are very good, some of them are not so good. It might be good for some communities, not so good for others. So how do you gather all that information coming from various sources and have that organized in the platform so that at the end of the day, you're still able to turn that impact into one score? And this is what investors need to have. And this is the objective of Impaakt, is to be able to bring together that huge diversity of approaches, of sources, of angles, of analysis to build a common, collaborative, collective assessment of the company.
And so is this something, it is relatively sophisticated, and there's a lot of information out there. There's information that the company puts out there. There's information from the press on the company. Some of it's intentional, some of it's unintentional. There's direct kind of consumer experience with the company, or, for example, Amazon's employees who are in the factories kind of saying that working conditions are terrible. So looking at the kind of whole environment and ecosystem, are you creating all of your own data, or are you leveraging each other's and others' data to make decisions? And then when you look at established players of the kind of earlier adopters in this, people who have kind of been doing this for a while, like a Sustainalytics or an MSCI index, who are trying to do maybe a little bit of negative screening, let's not invest in the horrible things. How do you see yourselves kind of fitting alongside these players in the evolution of this kind of shift towards more values-aligned asset allocation?
Well, so the relationships that we have as a fund creator, a portfolio creator with companies like MSCI and Sustainalytics is incredibly important. And you're right to say that the amount of data that goes into the decision-making process and the creation process is very intensive. At any given time, we're looking at upwards of 500 different indicators to assess company performance on many, many different topics. And so working with those organizations is immensely valuable from that front. The challenge, like you said, is that a lot of the traditional output of the use of that data is, not to say simplistic, but what you get isn't necessarily achieving progress in the way that you would want to think about it. So as an example of what I mean by that, if you look at a lot of the traditional approaches to like an ex-fossil fuel fund, where the marketers of that fund say, look how sustainable this is, look how low the carbon footprint is of this fund that we've put together. And so if you're an investor who really cares about those objectives and goals and reducing the carbon footprint of the planet, invest in this.
Right.
And what we would say is, now hold on, not quite. What you've done is you've simply cut out all of the companies that have meaningful exposure to these topics and issues in the first place. And yes, if you look at the metrics, the carbon footprint may be lower, but that's because all of a sudden you're looking at a basket of financial services companies. And we ask ourselves in everything we do that kind of question, which is looking at the companies that are highlighted by our process. Are they companies that are really performing where it matters? And that is what we're looking for. We want to achieve this focus on the companies that within each particular topic area are doing the most that they possibly can within their sector to accomplish those goals.
Okay. Bertrand.
Yeah, I've been using myself the data that are provided by the Sustainalytics and MSCI of that word, and this data is great. It has improved over years. We know that there is analysts out there that are checking the data, but the fundamental reason why we decided to do something different is, there are two. The first one is that data is there to measure whether the company do the things right, and we want to measure whether the company do the right thing, which is very different. So we want to really understand, what is the impact of companies and what are their practices. And the second reason, which is also very fundamental to the creation of impact, is the open source model. And if you look the way these data are being built today, it's by sending a questionnaire to those companies, all the listed companies. So the team at Sustainalytics or VGO or MSCI, they send a questionnaire about once a year to those companies. Those companies answer the question back. They will tell you how they behave and what process they put in place. Not talking so much about their impact, but really their processes. And then we will gather, those companies will just derive scores based on that. And so what those scores are being useful for is to understand, whether this company behave properly, whether they treat their employee well, whether they have signed all the international convention and all of that. But what it shouldn't be used for, and which is not working today, we shouldn't be using that data just to decide whether this investment is a positive impact investment. And unfortunately, many fund managers today, for the lack of a better solution, they're using that data to produce sustainable investment funds, green funds, social funds, whereas these data are not meant to do that. These data are just meant to help you understand whether the company is doing things is doing things right, but not doing the right thing.
Fantastic. We don't have much time left, so perhaps let's wrap it up with a final thought from each of you. So we have two brilliant pioneers who are looking at how we can democratize and innovate in the financial space to create positive impact, but not just kind of enabling a small group of people to do it, but to kind of broaden that. So final thoughts, final statement, some ideas that you'd like to leave them with.
Oh, that's the tough one. This one is this is for John.
John.
Sure. Well, as a final thought, I think our journey from here as a company really becomes about the storytelling, and our belief in the work we're doing will extend to that effort in really getting the word out about all of the good that is going on. We believe very strongly that there are solutions in progress, that there are companies that are doing the right things, and that the journey for us is really continuing to demonstrate and highlight with that focus in mind and presenting this platform as a true viable long-term alternative, that method of thinking is valuable long-term.
And for anyone who wants to put even $5 into higher impact public equities on a mobile-first platform, how do they do that?
Yeah, we're ready for you.
Website.
The website newdayinvesting.com or newdayimpact.com, as it is now. For those of you in the audience with iPhones, the app is ready today. Android users, give us another month. We're working on it. But very soon, that will be out as well. And then we'll be following that up with, of course, the web portal.
Great.
And continuing to iterate on the technology and the platform to reduce the barriers to entry.
Thank you, John. Bertrand.
Well, if I want to conclude with a call for action, I mean, we're here at the ChangeNOW Summit, and I think there is only one way forward, is to do that together, building the impact measurement together, investing together, pushing the financial sector together, transitioning the economy towards impact-driven, I would say, movement altogether. Just like John, I will do the same thing and revert you to the platform. It is also live and running, so please go there. You can access the information for free, so at least you can use that for yourself as citizens, as consumers, as employees, as investors. But also feel free to contribute, add your own views, share your own knowledge. Each of us have some piece of knowledge about the impact of companies. Let's bring all of that together, and then we have a very robust platform that we can really use to move things around.
And the website is?
www.impact.com. Impact is spelled with 2 A and a K, and if we have 2 more hours, I will explain you why.
Join me in thanking both Bertrand and John.
Thank you.
Thank you.